Hey everyone, with the stock market in rally mode, it's hard to find a cheap stock to buy. Seemingly everything related to artificial intelligence is soaring, and other than EV stocks, most of the market is moving higher, so it's hard to find a good value. Well, in this video, I've put together 10 ridiculously cheap stocks that are good values right now that investors can buy now and hold for the long term. So without further ado, let's take a look at what these 10 cheap stocks are.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Alright, so here are my list of 10 cheap stocks you can buy now. Now, I've ranked these stocks in terms of the metric I use to determine if they're cheap is the forward price to earnings ratio. And the first stock here on the list is Fiverr International, which is trading at a forward price to earnings of just 9.341. Fiverr International, the stock price is cheap because investors are concerned how artificial intelligence is going to impact the gig platform. Still, management has said there's going to be more jobs related to artificial intelligence to offset all of the jobs that are going to be replaced by artificial intelligence. So net, the management of that gig platform says that AI is going to be a small positive impact on the business and not a negative impact. That has not convinced investors who are still concerned about the impact of AI on Fiverr. The next one on the list is PayPal, trading at a forward price to earnings of 11.68. PayPal's stock price has been falling as PayPal has been shedding active accounts. The company's losing accounts, millions at a time, for several consecutive quarters, and investors are concerned how far will this decrease continue. Additionally, the new CEO that came in at PayPal has forecasted 0 earnings per share growth for 2024. The combination of those factors has PayPal stock trading at a ridiculously cheap valuation, and I think it's a good value at a forward PE of 11.68. The next stock on the list is Alibaba, trading at a forward price to earnings of 8.1. The primary concern with Alibaba stock is the geopolitical risk, being that the business relationship between the Chinese government and big companies has not been very friendly. Investors are concerned how that's going to impact shareholder returns going forward. The next one on the list is eBay, trading at a forward price to earnings of 10.41. To be honest, eBay stock regularly trades at a cheap valuation because eBay is not a growth company. eBay has been stagnant for some time. However, the good thing about eBay's business, and the reason why I recommend it, is it's a cash generating machine. The asset-light business model that brings together buyers and sellers generates significant sums of money for eBay, which has little reinvestment into the company. It doesn't reinvest that much of the cash back into the company. That leaves a lot of money for shareholder returns. The company recently started paying a dividend. Starting 2019, it does a lot of share buybacks, and I appreciate that asset-light business model, how it impacts investor returns in the long run. Etsy has a lot of the similar characteristics of eBay, bringing together buyers and sellers. Etsy, however, has a better growth profile than eBay, being that it's spending more on marketing and it's more of a niche market, and it's still in growth mode. So trading at a forward price to earnings of 13.02 has all the positives of eBay, plus it's still in growth mode, so you get that benefit as well. Pinduoduo PDD Holdings, the parent company of Temu, which is growing like hotcakes around the world, offering a cheaper alternative to Amazon, albeit with slower shipping, trading at a forward price to earnings of 11.64. I think this company is a relatively good value at these prices as well. Then you have Upwork, which is a competitor to Fiverr. I like both of these stocks. I like the gig economy platform stocks like Upwork and Fiverr, the asset-light business model, and the convenience it adds to entrepreneurs like myself who can go on the platform and hire individuals for tasks without needing to go through all the human resource challenges of bringing someone on board full-time. Next on the list is GigaCloud Technology, trading at a forward price to earnings of just 9.246. The global logistic platform makes it easier for e-commerce companies to handle shipping and handling and delivery without the significant sums of outlay to for the capital expense of building out warehouses, getting planes and vans and trucks and all that. GigaCloud simplifies all that and makes it more convenient for e-commerce company. This company is growing nicely too. It's also doing share buybacks, and the conduct of management suggests that they feel the stock is undervalued as well. Next on the list is Zoom Video Communications, trading at a forward PE of 13.11. Interestingly, Zoom's revenue has not come down since economic reopening. Revenue is just as high, if not higher, during the boom times of the pandemic when everyone was using Zoom seemingly every day. That's not the case anymore, but Zoom's revenue has not come down. What has come down is Zoom's profitability. It's having to work harder to secure sales. It's not just getting people going to its website, signing up and purchasing like they were in 2020 anymore. It's having to work harder to secure sales, offer more incentives, better deals, have salespeople go out and convince customers to purchase. But still, the revenue is still high. It's got a lot of user experience. That's going to make it difficult for any competitor to jump in and take market share of that industry. So I like Zoom at this value at a forward PE of 13.11. And finally, Stoneco, a forward price to earnings of 10.74. This was formerly a Warren Buffett stock. He's been reducing some of his shares of this one lately. Still, I like the management focusing on more profitable customers and not just going after any customer. Management said that it's going to go after the more profitable customers and spend less time on just any customer growth. I like those strategies. I don't like when companies go after customers just for the sake of having more customers, just for the sake of telling investors that they're growing. I'd prefer businesses go after customers that they're best suited to serve, and that increases profitability because they have a better match with that customer segment. So those are my 10 stocks to buy, and I think they're relatively good value at these current valuations. Now, one of the bigger risks when you're investing in cheap stocks is that they're a value trap. And one of the reasons why they're cheap is because there is some internal difficulty, most notably that there's some financial trouble brewing. And so I also wanted to share with you their cash flow from operations to sales. And you can see all of these companies are positive in terms of generating cash flow from operations. They're all generating cash flow positive. They're not losing cash flow. And for the most part, they're relatively strong cash flow from operations. The lowest one is Upwork at 3.95%. All the rest of these companies are 16% and above, with Pinduoduo at a robust 42.5%. What this means is out of every $100 in sales, this is the percentage that these companies are turning into cash flow. So $100 in sales turns into $42.50 in cash flow for Pinduoduo. That's a really strong percentage. And so this alleviates some of that concern of financial risk with these companies selling at cheaper valuations, because there's always a reason why they're trading at cheap valuations. I've gone through a few of the reasons. I didn't go through a comprehensive list of why all of these stocks are trading at cheap valuations, because these are 10 stocks and that would make a much longer video. But if you're interested in more analysis on any of these companies, I've got an abundance of videos on all of these 10 companies on my channel. So feel free to dig around and look for all of the information and do your own due diligence before going into these 10 ridiculously cheap stocks. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.